Hello, everyone. I am now finally worried about our current uptrend. It took, hold on, I want to put it on the all stock section because I can't stand looking at these arrows. Get rid of this. Currently, the market the pullback is getting dangerous. What's interesting is that we were slowly selling off, and every day that we were selling off for the past week, we had bullish intraday reversals off the lows. We were looking very good with the Russell 2000 looking stellar. But following the most recent session, Russell 2000 still doesn't look too bad as it pulled back, and you can see higher volume, but still well below average with the Russell 2000. But on the NASDAQ, it just utterly just looks like crap. The NASDAQ 100 broke hard on heavy volume. And even though that this is a select few of stocks, I don't see how this is healthy. I know after hours, Amazon is up nearly 10 points. LinkedIn is up nearly 10 points. And LinkedIn actually kind of gave early pocket pivot point signal ahead of earnings. But that you'd be a dangerous, crazy person to take that signal ahead of earnings. But overall, the action today just is not good. And the NASDAQ suffered another clear distribution day. Once again, here we go again, folks. Uptrend, low to no volume. Immediately we sell off on heavier volume. This is the third above average volume sell-off. We had one on the 22nd, had one on the 26th, and now 27th, and now we're having one on the 28th. So not good overall, and I am now officially nervous, especially whenever we have action that we saw today in our holdings. So S&E hit its final sell stop today. Look at that candle. And then Ruth, I've already been stopped out of, but on an end-of-day basis, it wasn't a sell signal. Well, now clearly it is. But just look at that candle. And this is a big liquid stock. And look at how it now trades in this kind of tape. And look at what Anik did to me. Anik knocked me out of all my positions, and then today, after earnings, it was up. But still, look at that big intraday reversal off the highs. Just look at how volatile these stocks are getting. It's just absolutely absurd. Early in the day, I only had one intraday sell stop hit. I moved all of my sell stops in PRAH from one here to putting half of it here and then putting half right here. Of course, it barely undercut that level and, of course, knocked me out of half before completely reversing and ending higher. This is not healthy action. It's a byproduct of a very illiquid, thin market, and I'm telling you guys, the biggest problem with this rally, I'm more than willing to embrace it, and I hope we find a low here soon so we can rally higher, because I still got a lot of stocks that overall look good, like, PayPal, ugly reversal today, but, still uptrending, and there are many others still, like Graham, are holding up. They probably won't here for long if we continue to get this kind of action. We're going to need to see an immediate reversal on Thursday or Friday and not see any follow through to the selling at this point for me to still have a bullish conviction whatsoever going into the weekend. I'm already extremely cautious. I would say that I'm now not even bullish neutral anymore. I'm pretty much neutral bullish, weighing the neutral side just because it was an ugly session. I just want to focus on it. S&P 500, S&PY, you can see volume still below average, but still the red bars, man, they're just always large. They're just always large. If they're not above average, they're still significantly larger than the day before. You got a pickup of the red over this green, a pickup of red over this green in the volume section. It's just not completely healthy. I think IBD has something like 5 distribution days in the S&P 500 and something like 6 in the NASDAQ, or maybe it's the other way around. Either way, that's a lot of distribution days even before the sell-off today, considering the uptrend that we're in. And I'm sorry, this explains why our new long positions haven't raced 20 to 25% in 2 to 3 weeks like they should have by now. This explains why we only have like 150% winner in CLR, and I think now it's 100% winner, actually, maybe. Yeah, it's 100%, but still, this is the only one? Really? And that just goes to show you that we're in a totally new kind of market environment. The bull trend, the uptrends of 1980 and 1990 are probably long gone. It's just probably completely over. 2008 was it, that when they started the quantitative easing and they decided not to let markets reset on their own, or at least basically mostly on their own, and they decided to go 100% all in with just messing with the markets. Now this is what we get, a bunch of, go nowhere kind of action overall, and or the uptrends are very weak compared to the previous ones. I just can't believe that this continues, but at the same time, I'm not shocked at all. But moving on to the rest of the sell signals, APOG failed. Ruth S&E, you already saw. CMN closing below the 50-day moving average, so that one failed. And then BABA failed, confirming its closing below these recent lows also. But the 50% levels, there were plenty of them. HSIC, brand new long, immediately 50% sell. NVIDIA immediately if I would have had sell stops on this intraday, which I didn't place, I'd have been completely knocked out of it. But now my final sell stop is going to be below today's low a day. But it eclipsed the 36.18 or 08. 36.08. Oh, it didn't hit it actually, so I wouldn't have been knocked out because I would have used 36.08 as my final sell stop. So never mind. But on an end of day basis, it's 50% no matter what, and I'm moving my final sell stop. I'm going to keep it at 36.08, I guess. I mean, what the hell's the harm at this point now? Or maybe it will 36.10 because it's closing below the 20-day moving average and above average volume. And when that's the case, when you don't have gains, that becomes the final sell stop. So my final sell stop will be 36.10. But PATK, not shown, but closing below the 20-day moving average. IESC, below the 50 and below average volume. You can do 100%, but technically it's 50% because it's still holding those early April lows. And then also speculative name AFMD, closing below the 20-day moving average on below average volume, but I believe, what was that, confirmation of the 20-day? Yep, confirmation of the 20-day moving average break. So it's a 50%er. And, like I said, it's not terrible out there. I mean, we can see that, we still have quite a few stocks that I'm tracking that are up, decently. XRS is still doing fine. HFFC was up today. AXGN, a new speculative long. Like I said, Graham. MNRK looks fine. Self. ECH uptrending. Fitbit is still working. TX Beta. But you know what the thing is? All it takes is one bad earnings release, and then you have a PRA, ANIK, and or a Ruth kind of like action. And I tell you what, in this market, this is why, once again, no perfect signals, no 20% of my capital in one long position, no 10%. The guys that can do this are fortunate. They live on the mainland. You guys live on land. You can watch the market all day, intraday. I am not going to be a slave to this profession. This thing was very lucrative for me in between 1996 and 2008. It's unfortunate the end of day trend following methodology is no longer lucrative at all. I assume maybe one day it'll pass, but one day it won't. By then I'll be full-time day trading as I can change myself to the schedule and to 3:30 wake up call. I tell you what, I'm going to have to move into a large house to do that stuff. But the bottom line is, if you're not watching this market intraday and able to follow stocks and trade on a very short time frame, it's going to be very, very hard to make significant gains. The CLRs, they're just not out there anymore. This one's acted perfectly, but don't forget, it shook us out of half of it before it could even get going. So also Graham, the next biggest winner that I have that's up over 50%. Don't forget, it shook us out of half of it before it got going. Folks, this never, ever, ever, ever happened with these kind of patterns before 2008. And when I mean never, I mean, yeah, that happened about 10% of the time, but now it happens 90% of the time. The tables have completely flip-flopped. It's just too volatile of a tape, even though that the VIX is so crazy because the VIX is so low at 15, but the way that the tape trades on an intraday basis whenever things get out of whack, the VIX might as well be at 50 because that's the way certain stocks act when they become illiquid post-earnings, like PRAH. PRAH, that sure doesn't look like a stock that all of a sudden is trading with a VIX at 15. You can see that the stock got volatile around, this whole area here in 2015, but you can see that it was prone to big intraday moves, but still, it's just ridiculous because the stock averages almost 400,000 shares per day. WTF. So, caution is advised here. No more new long positions. MRCY was the best one, but it's too extended short term. I would need to see this thing. If it's not touching the 20-day moving average, it has to be touching the 10 and 5. It's touching neither. So there are no new long positions. We are adding a hedge. UVXY, 1% only in the ETF scan. Was not confirmed in the price volume BOP scan, or else I would have made this a 2%er. But for now, I have no problem having some sells here. Taking these small losses left and right again. Here we go. And then just moving the capital into a little bit of a hedge and moving the rest on the sidelines Hopefully we can find support short term, or else it's going to probably get pretty ugly pretty quickly. Be ready.